Hey, this is June from Turning Point Life Investment, and this video is for October 11, 2008. So I'm sure all of you already know what happened this week. I don't really need to go over it. But what I'm going to talk about is what to expect next week. And I think what happened on Friday is it's a good sign of a bottom. So I think we're going to get a little bit of relief rally into next week. Okay, but here's the thing: don't be fooled into the rally. I think it's just a relief rally, a correction into this huge decline we had this week. Okay, I feel like obviously there's still more downside to the market, but the market doesn't go straight up or straight down. So even with this huge decline, we need a little bit of pullback in order for us to have another leg down. So starting with a 3-year weekly view, we have prices obviously very, very stretched away from the 20-day moving average. We easily broke through 190 and we managed to find some kind of support right above 80. Honestly, with this type of strength, support doesn't really matter. It can easily break through support, right? So I don't know. Finding the next level of support is almost like insignificant, right? But I mean, I just want to point out that within this year, even if I pull back a little bit, go into a 5-year view, we have never seen this type of overstretched prices, at least on a weekly view. Even if I go back 10 years. Okay, I mean, I don't know how clear this is for you guys on the video, but even 10 years ago, even when we had our burst in the tech bubble in 9/11, we've never had prices stretched out so much on a weekly basis as we do today. Okay, so that's pretty significant. That tells us that this is not just a small correction towards another bull market. This is actually a major bear market correction where basically this thing is going to drag on for years. It's not going to end next year. It's probably going to take 5 years or more. That's what I'm thinking. Okay, and this is barely just the beginning. Now, the next declines probably won't be as steep and as intense as this, but at least we're going to basically drag on, side trend, and really go nowhere because this type of correction, I don't know, it's going to be a tough trading for the next several years. At least that's just how I feel. Okay, but going as far as weekly view is concerned, I mean, this is basically what we're looking at, right? Expect some kind of pullback towards this area. Now, from an Elliott wave perspective, for those of you who study Elliott waves, this is what a wave 3 looks like. Okay, wave 3, as you know, it's a powerful, intense, just fast movement. All right, and this is pretty obvious that it's a wave 3. So what follows a wave 3? A wave 4. Wave 4 are usually corrections. So that's why I'm expecting some kind of correction pullback similar to this, right? This is wave 2. This is 1, 2. This is 3, right? Then 4 will be next, okay? And then we will have another leg down, which is wave 5, right? That's why I say that there's a possibility, very high possibility that there's still more downside to come in this market, okay? Now, going into a daily view, this is a 6-month daily. Once again, even on a daily view, you notice how wide and separated we are from the moving averages. Okay, volume on Friday. Okay, Friday we have, I guess you can say this is like a spinning top, all right, whatever you want to call it, but it's telling you that just looking at the bodies, we had basically 7 days of straight decline. All right, this is a considered decline as well, but just by the shape of the candlestick, you can kind of tell that the bears are starting to lose momentum. Right. I mean, 2 days ago on Wednesday, we had Doji. Although there is no follow through, it's kind of telling us that the bears are losing momentum. Especially when you have high volume like this, there's a very good sign it's a capitulation kind of move, as well as oversold. So you have like several things pointing to a very good chance of a bottom right here. Especially since we had a late afternoon rally. Usually stuff like that will carry on into the next day, or in this case would be Monday. Okay, so I wouldn't be surprised if we get a gap up on Monday and then a very large white candle. If that's the case, then we have a Morningstar candle. Okay, this is basically setting up for a Morningstar candlestick pattern. If we do that, then the next thing we have to do is look for resistance. And the first obvious resistance level will be this 20-day moving average. Okay, I told you when the market is trending, the moving averages will act as resistance in this case. So expect some kind of resistance towards the 20-day. Okay, going into an hourly view, we noticed that in the afternoon rally we stopped right at the 20-hour moving average, right? And this is why moving averages are so significant. Every time we tagged a 20-hour moving average, prices basically stopped or failed to break above it. So if you were trading this to the downside every time you tagged it, these are great bearish entries for more puts, right? If you trade puts or shorting SPY. Okay, but we do have some kind of support right underneath 85, 84 area. Okay, that's our first level of support. If that breaks, I expect to find some kind of support back towards like the 70s. Okay, that's when we had our low back in 2002. So resistance, if we do break the 20, obviously would be the 50-day or 50-hour moving average. So somewhere around the 100 area. Okay, if that continues to break, then expect to find some kind of resistance right here, right at the gap, which is roughly around 108. So we have the 20-hour, the 50-hour, and then the 108 area. Okay, so that's your basically 3 levels of strong resistance, and then support right here, right around the 84, 85 area. Okay, next the VIX. Right, the VIX, everyone's been talking about the VIX, how we have all-time highs. I mean, today we've pierced through 75. I think this lower tick is probably an error, so ignore that. But you can't help but notice that this is basically gone parabolic, right? And usually when it's gone parabolic like that, it's kind of like a blow off kind of top. Okay, we have nothing but large white candles. Okay, so eventually we're going to hit a top, and I think based on Friday's action, we pretty much hit a top for the VIX. So a lot of option premiums are really expensive right now because of this. And that's why I don't really suggest, let's say if you're going to play the rally, I don't really suggest buying calls, only because, well, if the VIX drops, that will decrease option premium. Okay, so even though, yeah, you are gaining premium through the stock movement, some of it might be offset through a drop in volatility, especially since the VIX is so high. So you got to watch out when you buy calls in this kind of environment. Okay, sometimes the drop in volatility would be more than what you gain through the stock movement. So you basically might even break even or experience some kind of loss. So, knowing how to play options is very important. In this type of environment, I would much prefer selling bull put spreads, for example, because when you sell, the whole point of selling is to reduce the premium. So when the VIX drops, your puts reduce in premium. Okay, so using this information, you can use it towards your advantage. Now, normally I would do the open interest, but after looking at the open interest, there's really nothing that we can gather from it. So I'm just going to skip it. But I'm just going to go back to the SPY. Like I said, we're due for some kind of pullback, some kind of rally. Okay, and like I said, this rally is a good setup for adding on to more puts once this rally fails. So it's just a matter of when this rally will fail. I'm thinking this entire next week will probably be bullish. Okay, but after option expiration, who knows afterwards, right? Maybe once option expiration is over, then we can continue on with the market heading down towards testing the 2002 lows. And that's basically what I'm looking at. So any failed rally towards the 20-day moving average should be a good sign for you to enter to more bearish positions onto SPY.